Okay, well, at the moment, I don't have any other messages over my shoulder here from people who tried to get in and couldn't. So I guess we might as well go ahead and get started. And then whether folks join, they can, of course, participate. And I'm recording this anyway. So if not, maybe they'll at least benefit from whatever we discuss.
Okay.
So as I said in my announcement, I really just try to do these every so often. Or as much as kind of needed or possible, just to give you guys a chance to ask some questions, help us walk through some problems, especially for those of you who might not be able to make it to campus. So really it's kind of just a free-for-all, and I'll just field whatever questions you have. If you have specific problems you want to look at, we can certainly do that. If you have general questions you want to talk about a bit, and then we can look at an example or two, that certainly works as well. So really, wherever you guys want to start, and since there's only a couple of you, you certainly have any opportunity here to ask whatever's most pressing. So I don't know if one of you wants to kick us off, or...
I was hoping other people would have questions, and then I could just listen to what you had to say to them, and then it would spark something for me.
Okay. And how about...
I'm sorry, I actually have a question. If you don't mind going over what's going to be in the test. I feel like whenever we do the work, I find it somewhat normal to do it. Easy to do it, but whenever I get to the quiz, that's whenever the wording and everything is different from what we actually study on Learn Smart.
Okay. Okay.
Yeah.
So,
yeah, the questions are a little bit different. I have that issue too.
Yeah, so generally speaking, I'd say the test questions are similar to homework questions, but shorter. So they tend to be, parts of a homework question. So if you think to kind of the Chapter 3 and Chapter 2 homework, and we can even poke in there to look real quick, they tend to be like a, 2, 3, 4, 5 part question. So the exam questions tend to be like one subset of that. So like one of the parts of a question. And there is, some multiple choice, and we don't really see those in the homework or quizzes much. So we like to try to do that to give you a little bit of an extra, not really boost or hint, so to speak, but more of a, hey, I know what I'm doing. I can get most of the way to an answer, so I can kind of pick the right answer from a set versus necessarily having to worry about number decimal for decimal. The other thing I'd say to sort of expand on my really quick point in my announcement today, even if the problems look a little bit different, I can at least guarantee that the underlying material is the same. And I know that in a test setting, that doesn't make it easier, because you kind of have that moment of either anxiety or, mild panic or whatever you want to call it, where you say, oh, I'm not familiar with this question or this type of question. But if this helps at all, I'd suggest, taking a second to step back from it and say, what from this problem can I identify, that pushes me toward at least something I've seen on the homework or quiz, even if it's not exactly the same. Again, I know in that test setting it makes it a little more difficult, but I can promise that the underlying concepts are the things that we heavily cover in the homework and quizzes. So it won't be anything obscure from the chapter that you haven't seen before that we kind of pull out of nowhere for the test, if that makes sense.
Yeah, that makes sense.
And I know that's fairly high level and vague and not super specific, but I hope it's at least a little helpful as you start to prepare for that. So I always tell folks for these exams, they are timed, but the time limit is supposed to be extremely generous. So you do or should have enough time to sort of process the questions without immediately worrying about trying to answer them. So at least hopefully gives you a few minutes to think through it and say, what do I kind of see in here from from chapters 1, 2, 3 in this example, you know, and kind of push you toward at least the underlying concepts of what you're being tested on. So maybe I'll poke into chapter 3 homework here and look at a question and sort of give you an example of kind of what I'm implying maybe, and then we can sort of talk about it from there. Maybe that'll be a little bit helpful. So let's see. Well, maybe I'll start with one that's a little more intuitive. Yeah, so here's a decent example, at least for discussion's sake. So this example, we had this theoretical company making furniture. They're using the job order costing system that we read about or are reading about. And it says they apply overhead on the basis of machine hours. So then we have all this other information about how they came up with a predetermined overhead rate, their results for the entire year, et cetera, et cetera. And then in this particular problem on the homework, you're asked to compute under over applied overhead, come up with a journal entry to close out that under applied or over applied overhead, and then several other things as you go. So if this were a test question, it would likely be kind of stopped here at requirement 1, calculating under applied or over applied overhead, and it would be a trimmed down version of this particular setup. So there's a lot of extraneous information here that you don't necessarily need to come up with this under applied overhead. So probably in the test setting, again, if I'm just using a general example, it would more have something to do with this predetermined rate and what they use to apply overhead, and then some basic information about what actual overhead was. And then the one calculation for that entire problem would be just the under applied or over applied overhead.
I think one of the things that I noticed on the quiz was they would ask maybe like something from step 4 in this problem where you would have to find the other 3 answers first in order to get the right answer from that 4th step. Or, well, actually, I haven't read it, but I'm just saying, like, because there's some things where you have to find multiple answers before you can actually get to what they're asking. And so I think I noticed that they did that some.
Sure, I understand what you mean, and to some extent that is the case for some test questions. My hope, if I'm sort of thinking through them off the top of my head, is that none of them are, you know, 4 and 5 steps down the road. Maybe it's only 1 step down the road.
Mm-hmm.
Because the last thing I want to do on the tests, or I should say we, since these are kind of standardized now, is have someone sort of know what to do for 90% of this multi-step problem, but still arrive at, you know, an incorrect answer for one particular question because they got stuck in the middle. And on the homework, it's easy to sort of grade that and separate it out like we do in this problem, for example. So my hope or my goal is that the test questions would sort of do the same thing. So it definitely doesn't prevent you from sort of missing a question because of an intermediate step, but it should cut down on the number of steps that are sort of mashed into one, if that makes sense.
Mm-hmm.
So let's see. If you guys don't have specific questions right now, if you want, I can sort of poke through some of the earlier material and highlight some things I think are sort of most important and or gave people the most trouble. Maybe we could start there.
Yeah, that'll be great.
Maybe that'll jog some things. Okay, cool. So I'll poke in the chapter 1 homework here first. So let's see. Yeah, so this I guess will be at a fairly high level, but certainly the difference between our what we generally call traditional format income statement and our contribution margin format income statement. Those differences are very important to understand. So in Accounting 120, you used entirely this traditional or financial reporting view of an income statement where you had costs grouped by, oops, that's not the one. I guess it wasn't in this example, where you had cost groups, grouped by function only. So it was sales minus cost of goods sold to get to gross margin, and then all of our selling and admin expenses to get to our bottom line net income. Here in Accounting 121, and sort of one of the big underlying purposes of quote unquote managerial or cost accounting is to analyze cost by things other than function. So in our contribution format income statement, we break costs out by behavior. So whether that cost is variable or fixed. And of course, if we have a cost that's mixed, as we often do, and in this case, selling and admin both fit that, we looked at some techniques to break those costs out into their variable and fixed portions and report them separately. So our contribution format income statement, the top line's the same as our traditional format. The bottom line's also the same, but that intermediate grouping is now by cost behavior rather than by cost function or purpose. So in our contribution format income statement, always sales minus our variable costs first to tell me what my contribution margin is. In other words, what do I have left from sales dollars after deducting that variable cost? Then from there, deducting our fixed costs, whatever they may be, doesn't matter the function again, to get to that same bottom line net income. So that's our sort of first foray into managerial accounting in Chapter 1 is, hey, let's look at some costs by behavior rather than just by function. And if you looked at a public company's publicly available financial statements, we'd always see income statements in this format, a much bigger version, of course, but the traditional format grouping things by function, and you would never see, or almost never see, the contribution format income statement. Companies wouldn't particularly want competitors, for example, to know what their cost structure was, right? Mm-hmm. So don't have to report this, but it's very useful for management purposes. If I'm a public company, I have to report this format income statement, the traditional format. Oops. Seem to be stuck on this exhibit here. Hang on one second. Anyway. Okay, so also in Chapter 1, we talked about direct and indirect costs. And sort of the golden rule here is to make sure we consider the cost object with which we're concerned. So costs can be direct with respect to one cost object and indirect with respect to another. And problem 2 is a pretty good example for that. So we had a bunch of different costs related to sort of corporate level costs. We had costs related to the apparel department for one particular store here, the Evendale store. We had costs associated again with sort of central functions, central warehouse, and so on. And we really were asked to come up with these subtotals of costs that are direct with respect to 2 different cost objects. So the first was, what costs are direct with respect to the apparel department? So that's going to be anything, again, that I can trace within some reasonable measure to the apparel department as a whole, regardless of whether that's the Evendale store or any of our other stores. So when I looked at this particular list, and I guess the answer's already, or the subtotal's already popped up here, but the costs I see that are traceable to the apparel department, certainly the apparel department cost of sales for the Evendale store, certainly the apparel department sales commissions for the Evendale store, and then the apparel department manager's salary for the Evendale store. Okay, so again, that's for the apparel department as a whole. Now I can contrast that with costs that are direct to the Evendale store by looking at, for example, the store manager's salary for the Evendale store. So that particular cost would be direct with respect to the Evendale store, but not with respect to the apparel department, right? The salary of that manager covering the Evendale store, that manager is responsible for apparel and every other department within the store. They didn't tell us much about what else we have, but presumably there are a whole bunch of other departments. Maybe there are home goods and whatever else. So since that manager covers everything, his or her salary is direct to the Evendale store, but not direct with respect to any particular department. Okay. And then again, if we look at something that's direct for the apparel department, sales commissions within the Evendale store, now that particular cost is direct for both of those cost objects, right? It's direct with respect to apparel because it is commissions within the apparel department itself. And it's also direct with respect to the Evendale store because we're talking about sales folks that only operate evidently in that same store. So when we're trying to determine if a cost is direct or indirect, the first rule or question we have to ask is with respect to what? What's our cost object or our object of interest? Does that make sense? Is there any, or are there any questions about that in general?
No.
Okay. I feel like everyone did fairly well on those questions. Let's see. So we talked about our contribution format income statement a bit here. And the difference between that and the traditional format income statement. Yeah, so our cost classifications, product period, and so on. So I'll talk about those for just a minute here too. So we talked about direct and indirect. We have not talked about manufacturing, non-manufacturing, product, and period. So the good news, at least from my standpoint, is that some of these things are synonyms. Right? And so remembering that is sometimes helpful. So if I say, what's the total product cost, all of my product costs are also considered manufacturing costs. Right? All of my period costs are also considered non-manufacturing costs. So use those somewhat interchangeably. Product costs for any company are any cost incurred to get my product ready to sell. So if I'm a manufacturer, that's everything that goes into the production process itself up until the point where it's a finished good and ready to sell, right? None of my selling costs get included in that. So the three big categories within product cost then are direct materials, materials that I can directly trace to individual products, direct labor, which again, as the name implies, labor that I can trace directly to individual products, and then manufacturing overhead. And the good news about manufacturing overhead is that it encompasses any cost that's associated with the production process, any product cost, in other words, that's not direct materials or direct labor. So if I want to come up with some cost classifications for really anything, I can sort of ask myself two questions. The first question being, is this cost associated with the production process, i.e. getting the product ready to sell? I'll kind of put the answer in. If so, it must be direct materials, direct labor, or manufacturing overhead. The follow-up question is this a direct cost? Is it something that's directly traceable to individual products? If yes, it has to be direct materials or direct labor. If no, it has to be manufacturing overhead. So there's almost a decision tree or very quick flow chart we can run through to determine those cost classifications. And I can sort of amend this one to say, if it's not associated with the production process, it must be a period cost. So always that sort of hierarchy. Is it associated with getting my product finished and ready to sell? Up until that point, it's done and ready. If so, it's got to be a product cost, either direct materials, direct labor, or manufacturing overhead. If not, it's a period cost. We'll expense it below the line, so to speak. If it is a product cost, is it a direct cost? If so, it's got to be direct materials or direct labor. If not, it has to be manufacturing overhead. That's sort of the catch-all for every other product cost that's not direct or indirect. Did anyone have questions or thoughts on cost classifications?
No.
Okay. If you do, we can always come back. So that was really it for chapter 1. So it's really the fundamentals of our whole management accounting or cost accounting view of things, right? The contribution format income statement, looking at things by cost behavior, and then sort of our cost classifications and everything that goes along with that. And as I said, or as I just kind of heard myself saying cost behavior, when we were talking about the contribution format income statement, we didn't really talk about that in detail. I don't know if it's been giving you all trouble much, but when we talk about variable costs versus fixed costs, the names are usually somewhat helpful, but sometimes it can be fairly easy to get turned around. So we need to think about what happens to a cost on a total basis and what happens to it on a per unit basis, okay, when we talk about what's variable and what's fixed. So variable costs on a total basis change with volume, right? They go up as volume increases. Fixed costs on a total basis, assuming we're within a relevant range that we sort of assume away, do not change with volume. On a per unit basis, variable costs do not change, or at least that's the assumption we make, again, within some relevant range of activity. And then fixed cost, if we sort of say, well, what do they do on a per unit basis? Well, technically they don't do anything because we're just sort of spreading those costs over more units. But if we are doing that calculation, they decrease, but not on a proportional basis. They don't move in exact chunks on a per unit basis like variable costs do on a total basis. So if we're trying to determine if a cost is variable or fixed, we need to think about what it does on that total basis. That will really make the determination whether it is variable or fixed. And then we want to keep in mind what that means for the cost on a per unit basis as well. Excuse me. Freddie, you had a question?
Yes, I do. I'm not sure if it's related to this, but there was a question in chapter 1, I believe, that it was asking us how much does it take to make X amount of units. We'll put in the answer, but then the following question will be, how much does it take to make an extra product? That was one of the questions that ran into the inconvenience. I really did not know how to solve the question.
Okay. Did you say that you thought that was in the homework?
Yeah, I think it was in the homework. It was
Okay.
in chapter 1, I believe. I can't remember the exact.
Oh, you know what? I think it might be number 5 right here. With respect to class, if Dojo had produced 1,001 instead of 1,000, how much incremental?
Yeah, exactly. Yeah, that one.
Okay,
that was the
perfect.
one that that was the one that was like, okay, I don't know what's that.
Okay, perfect. So I'm gonna, let's see, I want to sort of, for shortcut purposes, skip ahead a tiny bit here, and then we can circle back if we need to. Let's see. Total manufacturing costs. And then we have to make an additional unit. Okay. So, whoops. All right. So if I want to come up with as the question says, how much incremental manufacturing costs would it have incurred to make one additional unit? The first thing I need to do is look at which costs were variable and which costs were fixed, right? Because given my general assumptions about things, I can assume that unless I'm told otherwise, fixed costs aren't changing in total. Excuse me. So if I make one extra unit, I won't incur any additional costs related to those fixed costs. So if I'm looking at Dozier Company's costs here, I have fixed overhead of $30,000, fixed selling, which isn't a manufacturing cost, but just for argument's sake, just think about it for a second. So that's not changing. Fixed admin, that's not changing, and so on, right? But what I do have if I make one additional unit is all of the, start to type this out just a tiny bit here, all of the variable costs of production of making that one extra unit, okay? So I know that pretty much no matter what I'm making, I'm going to incur some costs related to direct materials for that extra unit, some costs related to direct labor for that extra unit, and then we'll also have to look at some of our other variable costs of production. So we know in this particular case we had variable manufacturing overhead, so I'm going to abbreviate that. And yeah, we're only concerned with incremental manufacturing cost. Okay. So really it's just my variable costs of production or my variable product costs in that particular instance. So here, direct materials, well, I'll just put the formula in for completeness here. I incurred $76,000 to make 1,000 units. So that's $76 per unit. I incurred $38,500 to make 1,000 units as far as labor goes. So that's $38.50 in direct labor per unit. And then variable overhead, I incurred $17,800, again, to make the same 1,000 units. So there's $17.80 per unit. So if I sum those up, I get a total variable product cost of $132.30. So that means for every additional unit I want to make, or I should say me as Dozier, want to make beyond this 1,000 units, the only additional manufacturing costs I incur are these variable manufacturing costs or variable product costs. So direct materials, direct labor, and variable overhead. So that total of $132.30, that's my additional or incremental manufacturing cost to make this 1,001st units. And I think they had us round off maybe. Yeah, round to the nearest whole dollar, so 132 bucks. And there we are. Does that make sense, everyone?
Yeah, it does.
Yeah.
Okay. Again, pretty much as a general rule, that's, if you have a similar question, that's going to be really the only things you need to be concerned with are what are my variable product costs, which are always direct materials, direct labor, and then if we have it, variable overhead. And then again, the key there, well, we don't need to worry about fixed costs because those aren't changing for this one extra unit. We're still in that relevant range of activity. Excuse me. Anything else there while I'm on this particular example? Excuse me again.
I think I'm good with that.
Okay.
I had a question on that too, but you explained it all.
Oh, okay, great. Okay, so yeah, again, I guess that's really it for chapter 1. Kind of keeping in mind our cost classifications, our new contribution format income statements, and our cost behavior concepts. So let me poke out of chapter 1 here. Poke through some chapter 2 again, just to give us an idea of, jog some thoughts or questions. Yeah, so the first and one of the bigger things in chapter 2 was calculating overhead rates. And I'll sort of just stop on this first problem and ramble for just a second about that. So calculating predetermined overhead rates is always done the same way. So that's kind of good or helpful. It's always the total estimated overhead for the particular period, upcoming period, divided by the total estimated activity. Remember, we're talking about predetermined overhead rates. So we're doing this in theory before the period, the year starts, right? We're trying to get an idea of how am I going to apply overhead throughout the year. So again, to do that, I want to come up with that predetermined overhead rate. And the only way I can do that when nothing has happened yet is to say, what's my total estimated overhead for the year? And what's my total estimated activity over which that gets incurred? Now, as you know from working through several problems, we have different activity bases that pop up. So the most common ones we've seen are direct labor hours, direct labor dollars, and probably machine hours. Those three tend to be by far the most common, at least for our purposes. So in this particular example, that's exactly what was happening. We had this total estimated overhead fixed, and then we had to come up with a total estimated variable cost and come up with a predetermined rate based on direct labor dollars in this case. So usually in the questions, we have that sort of unit of measure as a gentle reminder of what we're looking at. But if not, just think back to sort of this high-level calculation. What's my total estimated activity? Well, I need some kind of base by which to come up with that. Again, usually direct labor hours, direct labor dollars, or machine hours. The other big thing we did, or one of the other big things we did in chapter 2 here, was come up with total costs for jobs. The way we did that was to kind of look at direct materials and direct labor. Usually there weren't much in the way of calculations involved there, but then we had to use our predetermined overhead rates to apply overhead. So the kind of nice thing about applied overhead is similar to our predetermined overhead rate. It's really always done in the same fundamental way. It's always my predetermined overhead rate times my actual activity, in this case for that job. Right? So beginning of the year, we come up with our predetermined overhead rate. In this case, it was 69 cents per labor dollar. We're going to apply that overhead to every single job we work on in this particular job costing system at that same rate. Every labor dollar per job equals 69 cents in overhead applied per that labor dollar. So in this case, again, our applied overhead was just that predetermined overhead rate, which we came up with in step 1, times the actual activity, which in this case, again, is measured by direct labor dollars. And so just to show the calculation here, that was the 59 cent predetermined overhead rate per labor dollar times this 2,550,000 labor dollars. Oops, did I miss a dollar here?
69 cents.
Oh, 69, thank you. Sorry about that.
Can you just go over real quick how you got to 69 cents?
Oh, sure, yep. So let me just insert a quick row here, or a couple. So yeah, predetermined overhead rate, always our total estimated overhead divided by that total estimated activity. Here, our total estimated overhead, we had to do one intermediate calculation to come up with. So we had fixed overhead of 5,100,000, and we knew that our variable overhead was going to be 9 cents per direct labor dollar to support all productions. So I had to say, well, that means my total variable overhead is 9 cents times 8,500,000, or this 765,000. So then my total overhead, fixed plus variable, is the 5,865,000 here. And we have commas. There we go. Okay. So now I have my total estimated overhead, $5,865,000, divided by my total estimated activity. And here again we said, well, total direct labor dollars are going to be, we're estimated to be 8.5 million. So my denominator, the 8.5 million direct labor dollars, and there's my 69 cents per direct labor dollar. A lot of times this total might be given, but again, nothing different other than that one extra calculation. Total estimated overhead, fixed plus variable, divided by that total estimated activity base, in this case, direct labor dollars. And there's my predetermined overhead rate of 69 cents per labor dollar.
Thanks.
Sure. Okay, everyone okay there on predetermined overhead rates and sort of the at least first step in applied overhead here? Can always come back if we have something else pop up. Okay, again, this was similar other than the fact that we were acknowledging that, hey, different departments might have their own predetermined overhead rates. The only thing I like to sort of caution there is that if that's the case, so if we have Wilmington Company here, they have assembly and fabrication, and they have two separate departmental overhead rates in part 2 here, just make sure you're careful with using only the activity from that particular department in coming up with that overhead rate. So in the case of assembly, they're using direct labor hours. So our predetermined overhead rate is just the assembly overhead estimated dollars divided by only the direct labor hours in assembly. Fabrication, they tell us, was machine hours. So fabrication predetermined overhead rate would be the total estimated overhead in fabrication divided by the machine hours in fabrication. Again, if we're doing different departmental rates, just be careful that you're only using the activity and estimated overhead from each individual department. You're not mixing and matching. But other than that, it follows the same basic steps. Predetermined rate is still total estimated overhead, this time in the individual department, divided by the total estimated activity in the individual department. And then applying overhead operates similarly as our plant-wide rate as well. It's still our predetermined rate for each department now, times the actual activity in each department. So that was the only sort of twist in this second question here. What else did we look at here? Yeah, more applied overhead. Some more asking about sort of total manufacturing costs, which just makes us revisit our cost classifications from chapter 1. The applying Excel, I posted the solution on Blackboard as I mentioned there. Feel like this was, yeah, more mix of the same, although in this case we did have the two separate departments to work through. So it was sort of making sure we kept the two separate overhead rates. And then 5, a new selling price for job for, again, based on that sort of costing information within two separate departments. So yeah, the big deals in chapter 2, coming up with predetermined overhead rates, applying overhead on the basis of those predetermined rates, and then also extending that to make sure we can do those two same things if we have multiple departments with separate rates. Was there anything in chapter 2 that sort of jumped out as we were talking about any of those things that you want to revisit? Or?
No, I think.
Or were there any questions on the quiz that gave you trouble that you want to look at? I can open that up if that's helpful. Yeah, Eli, did you have a question? Eli, can you hear me?
I can hear you. I'm not sure if you're hearing me.
Oh, I am now. Yep.
Okay. Just in general, how long about should it be taking us to complete the homework and the quizzes? Because I know we have seems like a whole lot of time, but I don't know, what's average or what would you think it should be?
Yeah. So I want to first add a disclaimer that I hesitate to give a time only because I don't want or wouldn't want someone to think if it's taking them a little longer or a little shorter that, there's something wrong. So I'll just preface it by saying that. Now the quizzes, I would say, in general, they're designed to sort of be under sort of half the time that they allow. So they allow like 90, or chapter 2's did anyway. But really it's designed to sort of be under the 45 and sort of give you a chance to, have a little bit of internet trouble or slow down or anything like that, sort of that cushion built in. So for the quiz, I'd say it's, maybe that sort of halfway point is the projected average. Again, if you're quicker or a little bit slower, I wouldn't worry too much about it. I'm certainly not saying it it indicates there's a problem. The homework, boy, that one is extremely difficult to answer. If I look at averages and sort of project each question separately, it really depends on how much work you've done ahead of time. So if you've gone through the Learn Smart and you've done sort of some of the practice foundational and the guided examples and things like that, then generally speaking, I would expect those to take somewhere maybe around an hour, hour and a half. Excuse me. If you're going into them more cold, where you haven't looked at quite as many practice examples, or you kind of blew through the Learn Smart and maybe glanced at the book, then I certainly wouldn't be surprised if those took 3, 4, 5 hours, right? Because you sort of would be fighting through the questions as you go. I know that's extremely vague. I don't know if it's helpful at all. Yeah, if there's anything else I can clarify there, Eli, I'm happy to try. Okay. Well, we can revisit if you have other questions about it too. And since you brought that up, Eli, I know there's only a few of us here, but I would recommend, if you think about sort of the order of things, I don't know how you all have been doing it per se, and I don't want to tell someone to do something a way that doesn't work for them. But in my experience in sort of facilitating this for a while too, it seems like the general best approach is to start with reading the book, even if a lot of what you read doesn't seem to make sense the first time through. At least you're getting acclimated with some of the terminology and whatnot. And then the Learn Smart from there should give you a chance to sort of try in more of a relaxed setting to work through some of those examples. So a lot of those sort of test about terminology and how we apply different concepts and examples of those concepts, and a little bit how we'd work through some problems. So that's usually what I would suggest would be a second step. And then to the extent you find the Learn Smart to be, sort of better or worse, I would say from there, kind of determine how much of the other practice materials you want to use. So whether that's problems in the textbook, and again, I've posted the solutions for all those, whether that's sort of the concept videos, these guiding examples, or that foundational module. If you find the Learn Smart is, pretty smooth and you're sort of mowing through those and stuff's just sort of clicking, then obviously there's nothing wrong with trying the homework, especially since you have unlimited attempts. But for most people, I think some of this stuff in between is pretty helpful, because it gives you a first kind of crack at doing more of the problems and also at reinforcing some of that terminology and some of those concepts. Eli, did you have another question, or was your hand thing up from the earlier one? I'm sorry, I looked away maybe. Oh, okay, perfect. Okay, anything else on chapter 2 here that came up as we were talking about some of those things? Okay, everyone's okay on chapter 2? We can look at some chapter 3 stuff if you'd like. I don't know, how far each of you are in the chapter 3 material, since nothing's really due until Tuesday on it, but I'm happy to sort of hit some highlights here. So chapter 3, yeah, this first question does look a tiny bit overwhelming at first. Sort of one of the big focuses of chapter 3, or not sort of, definitely, is this flow of costs through our costing system. And that's what we're doing in this first big problem here, is determining based on what costs are hitting what accounts, what's happening in our production process. So if I can kind of use this little thing as a backdrop, I want to talk for just a minute about those flows in general. So over on the left-hand side here, we have raw materials, work in process, and finished goods. Right? Now those are all inventory accounts, but the only one we'll see, we'll kind of work with all three. So let me come back to my first thought there. These three we could see potentially on the balance sheet. I'll go ahead and just mark that. Right, these are all inventory accounts, so they're all assets. We can have raw materials that are sort of quote unquote worth something that are just not part of any particular product yet. Work in process, just as the name implies, represents things that are being worked on but aren't finished. And then finished goods, of course, things that are done and ready to sell. So those are permanent accounts on the balance sheet. Now, if we look over to the right-hand side here, manufacturing overhead and factory wages payable, well, they're not assets. Manufacturing overhead is a temporary account. We sort of call it a clearing account because you won't see it on any particular financial statement. Costs just kind of run through it, and they help us keep track of what we're incurring cost-wise that it's getting dumped into our production process. You're not going to see it on the balance sheet or anything. Factory wages payable technically is a liability, right? We could see that on the balance sheet if we have outstanding payables at the end of the period. And then cost of goods sold, that is an expense account, so we'll see that on the income statement, right? So the general idea here is that we sort of have this two-stage process as far as our overhead goes. Right? And we talked about this with regard to chapter 2. We have our cost accumulation and then our cost assignment. When we're accumulating overhead costs, that's when we're dumping them into this manufacturing overhead account here. Right? So any debit to the manufacturing overhead account represents some kind of accumulation of overhead costs. Credits out of the manufacturing overhead account, on the other hand, represent overhead costs assigned to products in process. And remember, in this case, and here's a good example, right? If we look at work in process, we see a debit, of $220,800 with a line marked overhead. That means we are assigning $220,800 in overhead costs to the products that are being worked on or were worked on during this particular month, or year, excuse me, January 1st to December 31st. So we can follow the flow of costs from overhead to work in process. So we'd have a credit here of at least $220,800, again, to represent that movement of overhead, that assignment of overhead to the products we're working on. Our materials costs, we dump those into the process as well. So those costs get moved from raw materials to work in process, again, as those products are worked on. So any credits we have to raw materials, we should see matching debits to work in process. So in this case, we see direct materials, $104,000 work in process debit. That means this credit amount here in raw materials should be $104,000, right? We're moving, if you will, $104,000 in raw materials into work in process during that period. We also sort of move, if you will, or assign labor costs to work in process as well as those products are worked on. So we have a direct labor debit here in work in process of $192,000. We should see matching credits over here in factory wages payable. Now the caveat here is that we also have wages that are not direct labor, right? So indirect labor we would see show up in manufacturing overhead, right? We dump that into overhead. So we have to be careful matching our wages credits and debits to our work in process account, right? Not all of our factory wages payable will go directly into work in process. Some will go through manufacturing overhead. Okay. So again, we're accumulating costs here in raw materials, right? We're moving those to work in process. We're accumulating costs in manufacturing overhead. We're applying those to work in process. We're accumulating costs from a labor standpoint and applying those to work in process. Then every period we should be moving costs from work in process to finished goods. And so I guess I should sort of start to sketch this out a little. So we're going to have like raw materials. Right? We could have this factory labor. We had that sort of clearing account we looked at in chapter 3 as well, and manufacturing overheads. We move all those accounts. If you picture sort of an arrow here, just stick one on the end of labor. Moving all those to work in process as we work on particular products and jobs. As those products and jobs get finished, we have to move the costs associated with them from work in process to finished goods. And then only when those products or jobs are sold do we move the costs associated with them to cost of goods sold. I know this is a lot sort of at once. Again, I'm not sure for each of you how much you've looked at the chapter 3 stuff. So a lot of this could be new, but that's our general cost flow. We're accumulating costs here, raw materials, factory labor, manufacturing overhead. We're applying and moving costs to work in process. As things get finished, we're moving those costs to finished goods to signify that those things are in fact done and ready to sell. And then only when they get sold do we move those costs through cost of goods sold. And that's a change for us from accounting 120 in the sense that we were always expensing things back then, right? Sort of just worrying about expenses month to month. Anytime we incurred an expense, it hit the income statement. Now we're saying, well, let's worry about where these costs are accumulating and how we're associating them with our individual costs. And this is a nice place to highlight that our direct materials, direct labor, and manufacturing overhead, which we called our product costs, okay, back in chapter 1 and 2. We also called them our manufacturing costs. We also can call them, this is where this comes in, inventoriable costs. Right? And this is exactly why. Because those product costs, as we incur them and accumulate them, we assign them and apply them to work in process. They sort of become attached to those products that we're building and making and shipping. Then the costs associated with them move from work in process through finished goods and out to cost of goods sold, right? That all happens through inventory, which is why we call them inventoriable costs. I'll stop there for a minute. Again, I don't want to make assumptions about how much of chapter 3 you have not looked at. So I don't want to make things more confusing if there's something we can back up and address.
I haven't read any of it.
Okay. Well, this was hopefully a decent high-level overview then, because that is really the focus of chapter 3 is how do I accumulate costs in my cost system, and how do those costs flow through inventory out to cost of goods sold.
Yeah. It always helps just to hear whatever you're saying, because there's little things that you say that the book doesn't say, or you just word it differently, and it makes it easier to understand.
Oh, okay. I'm glad it's helpful a little at least, yeah.
Mm-hmm.
Let me jump in homework here and see if there's anything that's not directly related to sort of costing. Oh, okay. I'm glad to hear that, Eli. Yeah, so we don't do, okay, both of you guys asking about this, it makes me think. We don't do typically like formal lectures for the online sections, but I'm more than happy to sort of record myself over like some PowerPoint slides for the chapters and post those out there for you guys if it's helpful at all.
Sure, I'm sure it would be.
Yeah, I'll go ahead and write myself a note. Guess we're maybe late for chapter 3, but I can at least start with the next one. Oops. Okay. The other thing in chapter 3, and again, I know you both haven't really gone through it yet, but I'll just mention, we look at under versus over applied overhead. So the good news for that, at least from a high level perspective, is if you've mastered or at least feel pretty decent about applying overhead from chapter 2, determining whether it's under or over applied is actually fairly quick. So I won't go through like a full problem here since you haven't gone through it, but I'll just kind of make an overall point. So if we're calculating over applied or under applied overhead, the test, if you will, is sort of at a fundamental level, is applied overhead greater than or less than actual overhead? This is sort of just as the name implies, have I applied too much or have I applied too little? And that's relative to whatever actual overhead is. So again, if we think back to chapter 2, applied overhead was always my predetermined overhead rate times my actual activity, whatever base I'm using. My actual overhead, for better or worse, is always just literally those actual overhead costs. So sometimes we'll have to add a bunch up. So in this particular instance, for example, let's see. Oh, so in this case, they just gave us a nice quick total. They just said total overhead cost for the year was $488,000. So literally all I would be comparing is that $488,000 actual versus whatever applied overhead I had for this particular scenario. I think in this case, we probably had to come up with a predetermined rate first. Yeah, and then apply it. Again, at a fundamental level, that comparison is always going to be the same. It's just, is what I applied based on what I already know about applying overhead, is that more or less than what I actually incurred? If I applied too much, then I'm quote unquote over applied. If I didn't apply enough versus actual, then I'm just under applied.
And then the answer is just the difference.
Correct. Yep.
Yeah. Makes sense.
Okay. And I won't talk about how to get rid of that just yet, since you haven't looked at it. I'm not sure that would not sort of make things worse. There's a journal entry or a particular 2 different types of journal entries we do to sort of clean that up. So I'll kind of leave that for now, just so we don't sort of muddy things. What else did we have? Yes, the schedule of cost of goods manufactured. And then the cost of goods sold in an income statement. Okay, so some of this you kind of know from chapter 1 and 2. The new thing is this cost of goods manufactured schedule. So I will talk about that for just a minute using an example, because I don't think it'll cause any problems just to discuss at a high level here. So the point of the cost of goods manufactured schedule, I might even kind of jot this down just to overemphasize here. Purpose of cost of goods manufactured schedule is to determine the cost of the goods that I finished this period. And I really do think it helps to think of it in that terms. Because all we're trying to do is determine from all these costs I've been dumping into the production process and all these costs I had associated with things at the beginning of the period, the end of the period, and so on. Really what I'm trying to find out on this thing is, what's the cost of goods that I finished this period? The other good news is, since it is the cost of goods we finished in the period, we'll always see the flow of that cost or costs moving from work in process to finished goods in our T accounts. So that example we looked at in problem 1, we'll always see some entry where something's moved from work in process to finished goods. Excuse me. And that will reconcile to the cost of goods manufactured. Again, it literally represents the cost of goods that I finished this particular period. So if we look at some of the components of that, that'd probably be a little bit helpful here. So in direct materials, we have a little bit of a reconciliation to figure out what we actually used, but that's nothing different than sort of our inventory flow from either chapter 1 or even accounting 120. So here we kind of said, well, what did I start with in raw materials? What did I add to it? What did I have left? So what must I have used this period? We're trying to get to what was used in the production process from a raw materials standpoint. Direct labor, fortunately, is usually fewer calculations. Usually we're just saying, well, what did I incur in labor costs? Right? Some rate of labor times number of hours of work, or whatever the case may be. And then overhead, it's going to be the amount that I applied to work in process. Okay, so as you start to review that, be careful there that you don't think of overhead incurred, because again, that could be different. And that's why we can end up with over or under applied overhead. Think of it in terms of what I applied in overhead. Again, those 3 things represent my manufacturing costs. If I highlight my row back here, direct materials, direct labor, manufacturing overhead, always are 3 categories of product or manufacturing costs. Once I've determined, the total manufacturing cost for the period, then I need to reconcile with work in process. And the reason we do that is because, again, we're trying to figure out what we finished this period. So we have to account for what wasn't done at the start of the period and what's now finished at the end of the period. All right, so in other words, if I look at the numbers here, I'm saying I incurred in costs $685,000 in manufacturing costs this period, but I also had $32,000 in work in process when I started this period. So I had these things sitting in the storeroom, and they were partly done, but they weren't all the way done. So if I add to that the costs I incurred on the production process or dumped into the production process this period, I come up with this little subtotal of what's my total cost of available work in process. What's the cost of all of those things I could have possibly been working on in this particular period? Okay, so in this case, it's 717. Right? Then if I deduct from that the things that are in work in process at the end of the period, in other words, the things that still aren't finished, the difference will be the cost of goods manufactured, aka cost of goods finished this period. So sometimes this schedule can look a little daunting when you first glance at it, but if we can break it down to the fundamental pieces, I think it's not quite as terrible as it may look. So really I'm looking for what are my costs incurred manufacturing-wise this period, direct materials, direct labor, manufacturing overhead. That brings me all the way down here once I do that. Then what did I have partly done at the start of the period versus what I had partly done at the end of the period? And the difference between that situation will tell me what I finished in this particular period, what I moved, in other words, from work in process to finished goods, things that are done, ready to sell. I could sell them tomorrow if I wanted, or today if I wanted. And then again, just to take a chance to reiterate something we talked about earlier, this cost of goods manufactured that moves to finished goods, later on down the line when we look at the income statement, we'll want to figure out, well, what did I actually sell this particular period? Well, this cost of goods manufactured is going to factor into that, right? Because the cost of things I finished that became part of finished goods means I had a whole bunch of inventory that was now ready to sell. If I reconcile that to what I already had available to sell that was finished, I can come up with that cost of goods. So again, that just represents that final step that we talked about just up here, meaning, well, this is cost of goods manufactured, getting things from WIP to finished goods. I also, on the income statement, am showing how those costs moved from finished goods to cost of goods sold. Are there parts of that as you hear it or see it spark immediate questions? Again, I know after you read through it, you may have questions, but is there anything that popped up now that I can back up to?
No, I think it was all good. Yeah.
Okay, for now, sure.
Mm-hmm.
And Eli, I'm keeping an eye on the chat in case your mic doesn't come on. If you do type, I will see it here on the corner of my screen. Okay, cool. And then really the rest of chapter 3, I'm not going to undersell it because these problems are, they're certainly not easy, but they are iterations of the same thing. So they're dealing with our cost accumulation. So for example, yeah, we're accounting for the purchase of materials. That's just cost accumulation like we talked about up here. And then also give you a chance to apply some overheads. Well, somewhere along here, applying overhead. Yeah, here we are. Applying overhead to work in process, and then everything that follows that. Moving it to finished goods like we talked about a minute ago, and then accounting for the sale as well. So again, not underselling this because it certainly is involved, but the fundamentals of it are really what we did sort of talk about for a few minutes here. Can I accumulate my costs, and then can I assign and move them through my cost system all the way to sale? That's the crux of this chapter 3 stuff. And then another fun applying Excel piece, sort of close this out. And I think that's it for chapter 3. Well, do you guys have other questions that are maybe not even related to Chapter 3 that came up as we were talking about this material? Or anything else you want to discuss for now? Excuse me. As you're mulling that over for a second, I would say too, as I mentioned for the schedule, the first exam opens this Thursday, but it's open for an entire week. So I would like to try to schedule, another one of these. Maybe I'll try to find a time or two that's maybe even better for more people. But if it is only a few people, it's only a few people. I'm still more than happy to do it ahead of the test, next weekend or some night in between. So stay tuned on that, I guess. But yeah, I definitely can try to have another one before the test. Excuse me.
Okay. I don't have Tuesday nights open because I have class that night.
Okay.
So any other night probably would be fine.
Okay.
Yeah.
Oh, and Eli, I saw your note too. Okay, good. Yeah, I know you certainly may have questions as you work through more of Chapter 3 too. I know we sort of hit the highlights, but devil's always in the details. So yeah, and that it certainly is a big part of Test 1 and at least fitting those things together. So I think it would be great if we can circle back and kind of give another chance for questions.
For this course, do you think that it gets easier after you build the foundation of the first few chapters? Or is it just...
Yeah, so I always hate to sit on the fence with anything, and I know it sounds like I do it all the time. I would personally say it does get a little bit easier if you kind of nail the foundation. The other, quote unquote, good news is that some of the things we do later in the semester, while they certainly are related to these things, they move in sort of fairly big different directions. So if there are certain parts of the fundamentals as far as like cost flows that give you repeated trouble, certainly persist on it, but some of the stuff we'll cover later won't make you revisit everything from the early chapters.
Okay.
So I feel like sometimes that's somewhat comforting to students if they have a couple little things that they don't sort of kind of ever feel great about. It's like, well, it won't haunt you forever, or at least as far as the course goes. But yeah, certainly the foundation here, I think, is critical for most of what we do.
Okay.
Well, if you guys don't have other questions for now, I can sort of call it here. And I have been recording this, so I'll post it for whatever's sake if you want to rewatch any piece of it. And again, I'll look at trying to schedule a follow-up or just a second iteration of this ahead of the test, so that hopefully people can have a chance to attend that before they get in and take the actual test.
Okay. I don't have any more questions.
Okay. Hey, Eli, did you have anything else? I don't want to cut you off here if you're stuck typing there. Okay, perfect. All right, well, have a good evening, guys. And again, stay tuned for an announcement as far as the next one of these deals. And thanks for coming.
All right. Thanks for having me. I appreciate it.
All right, take care.
You too. Bye.